Next up, we have FT Cash, that's empowering financial inclusion for underserved micro merchants through payments and loans. Please put your hands together for Sanjeev Chandak from FT Cash.
Good evening, I am Sanjeev Chandak, co-founder and CEO of FT Cash. We are a mobile payment and a loan platform for the merchants, especially the smaller ones. So our vision is to be the #1 financial services institution for the merchants. So we are focused more on the merchants and being able to provide them payments, loans, cash management, etc. We're looking now to get to about 1 million merchants by 2020. So we have an experienced team of founders and advisors. So my background is, I worked in finance and tech. So I was at before I went to IIT and then did my MBA at Wharton, and I worked at Capital One, did a lot of subprime lending, new product development, etc. And last I was at Deutsche Bank. Deepak Kothari, strategy consulting in KPMG, Grant Thornton, and Deloitte, and Weber. He went to NIT and then Harvard, and then has worked at World Bank, LGT Ventures, XPRIZE, etc. We are backed by Ivy Cap Ventures. The addressable market, so we are focused more on the offline merchants, which we believe is a large opportunity in this space. Obviously, with demonetization, it has increased even more. So we are focused on getting these merchants to accept digital payments. We are very focused on the merchant side. So we are on the acquiring side, and we have an open architecture platform where we work with all the issuers. So now we work with the credit card companies, the wallets, UPI, net banking, etc. And on the lending side, we believe, once again, a large opportunity, about 300+ billion of lending opportunity in this space. Currently, what we find is these small merchants don't have access to established institutional channels. Since they primarily deal in cash, they don't have access to get a loan from an NBFC or a bank, though we'd see some emergence of SME-focused platforms, but the form factor is not there in the sense that when you need the money, when you need the loan, there is a long process to apply documentation, etc., before the loan is given. These are some of the merchants' pain points, right? So one is, number one, they don't want to buy expensive point of sale hardware because they don't know if it will work, if the customers will transact. Bank interface is fairly tedious. I have worked with a bank. I'm sure there are bankers here. Banks don't want to deal with the small merchants, and neither do the small merchants want to deal with the banks. In terms of cash, even though that's the existing platform, there are a lot of issues in terms of fraud, error, etc. And India is, once again, a fairly assisted economy. So when you are in the office, you are ordering groceries from a Kirana store. The groceries get delivered at home. And with this platform, you can make the payment from the office and complete the transaction. And bank loans are not available as well. So we have come up with a platform where there is no upfront cost for the merchants. You basically, anywhere in the country can sign up in less than 5 minutes. Literally, you can be live and accept a payment. Remote payments are accepted. We have different, all kinds of issuer payment platforms. And we do collateral-free business loans, and we help with the disbursal and the collection of the loans as well. In terms of how it works is we have different mechanisms or channels for different use cases. So we have mobile application where it is mostly used for recurring payments. So for example, we have made IIT Bombay cashless, where it's accepted at all the canteens, etc. And a lot of students use mobile payments to make payments. QR code for proximity in-store payments, where a customer can scan a QR code without even downloading an app. And finally, link payments, where merchants, more evolved merchants can send a link and make a payment. This is our traction. So we started about 18 months back. In the last year, in 2016, we have grown 65 times. We have more than 10,000 merchants on the platform and signed up with 10 NBFC partners to do the lending part of it. We have a 45% team as well. This is our roadmap that we are looking at. We are looking at by 2021 March getting to about 1.5 million merchants, about 1,200 crores in terms of revenue and an EBITDA of 200 crores. These are some of the awards that we have received. That's all. Ready for questions?
Can you a little bit talk about your revenue model a couple of slides ago? The next one.
This one?
Yeah, in terms of like the payments and the spread and like how you...
Sure.
How it's
So we charge approximately, let me just skip to another slide. So we charge approximately 1.6%. It's a pay-as-you-go platform where we charge merchants a commission on every transaction. And obviously we have to pay issuers part of it. So we expect to keep about 30 basis points on the payment side. And on the lending side, we are looking at a lending rate of anywhere from 18 to 35%, which is in fact fairly much better than the alternative that they have currently. And we're looking to keep about 5% out of that.
How do you acquire the small business merchants right now?
So we have different strategies to acquire the merchants, right? So the standard one is the feet on street, where people go out and see the market and acquire merchants in a neighborhood or a locality, and then word of mouth spreads.
And what proportion is feet on street today?
So right now my feet on street merchant acquisition would be approximately 40%. And then the remaining we look at working with associations and groups. So for example, tying up with the Radiology Association of Maharashtra, etc., where then they disperse the information to their members. And then we have other models in terms of resellers, etc.
So that's a pretty high acquisition cost in terms of feet on street for small businesses. Their lifetime value might not be that high. So tell us a little bit about how the economics plays out in terms of how much you have to spend to acquire them, what's the sales efficiency, and what are they worth to you?
So if you look at the cost of acquisition of a small merchant, right? If we look at both payments and lending revenues, we break even in approximately, the cost of acquisition gets recovered in approximately 4 months. Because these small merchants, even though they are small, their transaction, right now my average transaction on an active merchant is close to 90,000 rupees a month. So they really transact a decent amount of value.
I have two questions. One is, there are a fair number of now credit lending companies online which are using data-driven credit lending. Are their rates also 18 to 35 or are their rates lower?
Sorry, are they close to 18?
Their rates, are they lower than 18 to 35%?
So they vary, right? So, I mean, if you look at the data lending companies that do online, they will anywhere be from 15, 16% at the lower end, and they go more than 40% on the higher end.
And this demonetization and the push to digital, how does that impact you? Has that pushed your business plan ahead? I mean, brought it forward, or is it creating more competitors for you?
So this business plan is developed after demonetization. We're seeing a lot of positive things. What we are seeing is merchant awareness and acceptability to use digital payments has increased multifold. So I mean, it's no longer a conversation that should I still be using cash because I have been using that for the last 20 years. It's more like, yeah, I know that I have to make a shift to digital payments. Now it's a question of what works well for me. So I think that's a big switch that has happened. The other thing that works in our favor is that we work with all sorts of payment instruments, right, or all sorts of issuers. So when a merchant signs up with us, it's a full stack solution. So he can accept free charge, he can accept Ola Money, he can accept Amex, Visa, MasterCard, UPI, everything. So it's a much easier process for him, and he only has to deal with a single guy from a payments perspective.
So for the lending business to work, you need a lot of data on the transactions. And so you talked about 90,000 rupees a month in transactions. What proportion of it is going in through digital, meaning that you can track it?
So again, it varies. For some merchants, we think we have data that no, the digital payments through our platform is almost no 30 to 40% of their entire business. For some people, it is no 5%. So we have a good sense based on different categories. That's number one. Number two is when we do lending, it is based on the transactions that are going through our platform. And merchants, so we do lending of about 1.5 lakhs, give or take on average, right? So it is not, the way we look at it is we should be able to collect it back over 6 to 9 months from the transactions that are happening on our platform. So it's like a merchant cash advance product, and it's flexible with the business cycle.
All right, thank you, Jury. We have the audience question.
How do you ascertain credit worthiness for merchants and ensure low default rates?
So once they are on our platform, right, what we do is we have all the transaction data, which is a very good predictor of risk, number one. Number two, we have the relationship with the merchants based on which we can do a good credit scoring or credit assessment of the merchant. And once we feel that merchant has decent credits, then only we provide them the loan.
Is the first time merchant acquisition mostly through relationships, or
Sorry?
when you acquire the merchant for the first time, then what do you do?
So when a merchant comes on our platform, first he has to do transactions on our platform. That's how we build the history, and we can assess the credit risk. And post that only we offer them the lending facility.
All right, thank you, Sanjeev.
Thank you.